come on time, he doesn't like it at all.
Yeah, he's always stuck on Tulsi Pipe Road.
Yeah, he doesn't.
But on a more serious note, apart from their friendship, what binds the team at Seedfund is that each of them brings something different to the table.
From a quality point of view, I think both of us are a lot more intuitive in our investing, while Bharati is a lot more rational. So she brings the process and keeps us honest. So, you know, in hence, you know, she makes it so that we do discuss stuff in, you know, greater detail than what we left to two of us. We might just go like mavericks and, you know, do stuff.
Pravin, I think just his vast experience of having built a company in India, what are the executional challenges? How do you deal with people? You know, how do you take somebody who's may not be your A-star team, and how do you help them perform to the A-star level? So, and I think the executional challenges that we face in India, I think that's really his biggest contribution of how to handle that, you know, how to budget for it, because a lot of those errors require capital as well.
In many ways, the story of how Seedfund was born is the story of early-stage venture investing in India. In 2000, Pravin and Bharati were part of the team that set up India's first institutionalized angel fund, Infinity. Meanwhile, marketing maverick Mahesh Murthy started off Passion Fund, in which he ended up being the sole investor and manager. Together, their experiences encompassed the short-lived exuberance of Y2K and the apathy that followed. What they learnt created the do's and don'ts list for Seedfund.
I had this little two-person team called Passion Fund that did that. And while I was doing that, we do a lot of these business plan contests and judging around IIT Bombay and elsewhere. And the only other person who would consistently be there as a judge from 99, 2000 onwards was Pravin, right? Pravin asked me to join the board of one of his companies, Brain Visa. Then I briefly parachuted into another of his companies, India Games, to kind of help turn it around from desktop to mobile. I stopped investing around 2004, 2005. The whole world which had come to India, setting up VC funds in 2000, 2001, shut down and went away. There was really a lull in early stage investing. We felt this was the right thing to do. So we pretty much said that let's see if we can come together.
When we launched Seedfund, we said let's first look back to what we have learnt as early stage investor, and we brought that to bear on Seedfund. So we want to invest in startups that focus on India markets, and that again it was a learning from Infinity, because we said we need to invest in entrepreneurs who are close to us so that we interact with them. It's not, you know, that everybody is driving distance away, not flying distance away. And entrepreneurs need to be where it's at. And third learning was that, you know, most of our entrepreneurs, more than capital, is what they need is really time. So we said we'll give a lot more time, and even if we give a lot less money. So I think those are some of the learnings, and that's how Seedfund started.
You can build a company in India with around $1 million, that is 5 crores. You don't need to, and you know, it's always a good idea to size the business in such a way that the amount of money that you invest, there is a high probability that you can actually become operationally break-even. So the entrepreneur must also realize that he is not in the game of perpetually raising money. That you have to start earning money such that if the economic cycle goes bust, there may not be any money later.
And serial entrepreneur Somil Majumdar has lived through this reality. Now on his second entrepreneurial outing with EduSports, Somil was forced to shut down his remote tech support venture Q Support in 2001 because his investors lost interest and he ran out of patience.
Was this sense that, you know, 3 years, 5 years, you build a business, and if you've not done a good enough business in 3 to 5 years, you're pretty much wasting your time and, you know, go on to do something else and become what was called and seen to be cool, called serial entrepreneur. Now I think there's a lot more maturity about the fact that, look, businesses take time to get built. 99, 2000, a lot of us were, I think, slightly naive in terms of what it takes. A lot of the models were very US-centric. And I think now we have, maybe all of us have kind of realized that there is an India reality, and the way you build a business in India is fundamentally different, and you can't just copy-paste international models.
And it's exactly these kinds of experiences, a failure of trying to copy-paste a US model of investment in India, that led to the genesis of Seedfund in 2006. For their first fund in 2006, they raised about $15 million, one of the smallest VC funds at the time. That fund supported 12 startups with an average investment ticket size of $1.25 million. Carvalho in 2010 gave Seedfund a 9x return, and they're now expecting similar or better returns from both Paninder Sama's online bus ticketing portal redBus and Ashwin Kumar's low-cost hospital chain Vaatsalya. And while the ecosystem might have matured, Mahesh feels there are still some structural issues around exits that need to be ironed out.
You know, in the US, you can take a company from zero to like IPO in 6, 7, 8 years. So if you're a 10-year fund, you can see the entire life cycle of a company within the tenure of your fund. In India, companies take longer. I mean, even a Naukri, a Make My Trip, most other companies have taken 10, 11, 12, 13 years to IPO after the date they started. But we're somewhat constricted by the fact that our investors understand the structure of a 10-year fund, which basically means that in most cases, unless we transfer or move a holding or get our own second fund to invest, the fund that invests first is unlikely to see the final exit of the company. Right? So which basically means that on one hand, you may not see the highest possible return because somebody else is going to come in. On the other hand, you may not actually see the company all the way through.
There is one level of satisfaction when you finally exit and you make some money. The second level of satisfaction is that your investee companies must believe that you are doing the best you can.
But that's really, you know, an issue that we have to tackle. Till we can change people's minds out there saying, you know, you should not be doing a 10-year fund, maybe you should be doing an evergreen fund, or maybe you should be doing a 12, 15-year fund.
Seedfund's approach to investing has also evolved with their second fund. The team now looks at deploying bigger sums of money or keeping options open for follow-on investments in portfolio companies so that they don't end up exiting before they really need to. Seedfund, an incubator, was born for precisely this purpose.
Mature entrepreneurs can get as much as $500,000 to $1 million or $2 million from us, while the seed farm guys will get up to 50 lakhs from us, where we can sit with you and flesh out the model. If it doesn't work, you know, you shut it. And if it works, then you have the ability to invest more money in it. So to that extent, it becomes a proprietary deal flow for us.
The ecosystem is also helping entrepreneurs evolve and develop. I would call it the whole ecosystem is getting to an adolescent age, you know, from being toddlers 10 years ago now. So it's all, I think, bodes well for India and Indian economy.
And Mahesh believes what the ecosystem really needs now is for the investment community, angels and VCs to open up channels of communication with the government and push for regulations that are not schizophrenic in nature.
I do think that, first of all, among us, all of us in the investment community have done a pathetically bad job in terms of you know, connecting with the powers that be in North Block and South Block in Delhi. We've done an atrocious job. There's no reason for the Ministry of Finance to say that foreign direct investment can't happen in e-commerce. So somebody has to go and educate the Babu. The fact is that the big bazaars have gone there and got their point across. So right now the Babus represent Big Bazaar. The Babus represent Biryani. The Babus must also represent this emerging technology side of the business. The second thing is in terms of taxation, right? So there's always been this government doubt on, well, you know, is a Vodafone transaction, it's a Mauritius transaction or a Cyprus transaction. Is that due for tax in India? Now, because of that uncertainty, even though, you know, the Supreme Court's been batting it back and forth, Vodafone won and so on and so forth, there are investors saying, should I go into India or should I not? Because the government seems to be schizophrenic. There is really a revolution waiting to happen. Promote entrepreneurship. It's really the fastest way to get development. You're not going to get development by being good to the Ambanis and being good to the Tatas. You know, that's going to happen anyway. But allow small businesses to grow. And, you know, that's really where the future is going to be.
It will be our call, individual call, कि भाई ये चल नहीं रहा है, तो बंद करो. You accept everything you do can't necessarily work. Because you are taking a punt.
As an entrepreneur, the first instinct you have is leave the wheels, I'm going to take the wheel myself, right? And I think I've really trained myself very hard to always step away and say no.
Differentiation came when we stopped using the term businessman and we started using the term entrepreneur.
Well, we say more power to the new Indian entrepreneur and the new Indian investor. The government on its part is finally making entrepreneurship part of its plan and has in fact set up a fund to nurture talent. But with that, it is time for us to wrap up this edition of India's Angels. Next week on the show, we talk shop with angel investor and Google India head Rajan Anandan. Also catch up with former Genpact CEO and now angel Pramod Bhasin.